Hey, everybody, welcome to this episode of Real Estate Strategies with Remax Hallmark. And if you're a real estate professional listening to this or watching this, a question for you is since you're working hard to earn a living, to build your business, earning those commissions, wouldn't it be amazing to be able to learn how to strategically manage and build your wealth? So today we have a fantastic guest. Her name is JoAnne Martin from the PREC Planner. She's done a lot of work with Remax Hallmark, and I'm sure she's done a lot of work with other brokerages as well. She's from Ottawa. And I'm just going to read a couple of things from your profile because this is very exciting. You're a CFP, Certified Financial Planner. You're the CEO and lead financial planner for the PREC Planners. You and your husband have both been self-employed since 2015, and since 2016 you were in the financial industry, currently working on your CLU, which is Chartered Life Underwriter, if I'm not mistaken. Got it right? Yeah. And you've got a hobby farm. So we're going to bring a couple of these things up in our conversation, how you're able to do that as a self-employed, dual self-employed income. Welcome, JoAnne, to Real Estate Strategies.
Awesome. Thanks so much for having me on. Let's do this.
It's our honor, and I'm very excited about this. So we're going to do this conversationally because, it's always fun to talk about money, not only making it, but also preserving it and building wealth. But before we get into the real estate agent side of the story, let's hear about your story, how PREC Planners came to be. I know you got into financial planning, and being a CFP is, it's very, very demanding in terms of getting that certification. So that means you're next level in terms of being able to manage finances and wealth. Take us through your story, how you became self-employed and how wealth management became part of.
Awesome. And thank you for recognizing the CFP. I think a lot of people outside my industry don't really understand that designation. I was a mortgage. I had a previous career, nothing to do with this industry, but I went to college for. And then in 2015, I had 3 kids under the age of 5. My husband had his own business, and it was just time for change. And I just kind of want to be a financial planner. And so if you Google how to be a financial planner, the CFP pops up, and I was like, I'm going to be a CFP. So back then you still went to college to do it. So I registered, went to Algonquin College, and I sat there and I did 2 of the 4 courses. And I was the only person in the room. So the CFP is really a designation for people that have already been in the industry for a while. Like you can't even write the exam until you have 3 years of full-time industry experience. So I was like at the front of the room being like, knew nothing, totally green, completely different industry before this. And my instructor came up to me and he's like, what are you doing here? And I was like, well, I'm going to be a financial planner. And he's like, no, you got to go out and get some work experience. I was like, well, how do you do that if you're not designated? Anyway, so I got my mortgage broker's license, was doing that for a while. And then I got my mutual fund license and my life insurance license, joined Freedom 55, and then just continued my CFP. Took me a while to get it, but I did. And that's kind of the story of how I entered the industry. It was like an evolving, long journey. Yeah.
Right. Well, getting into mortgages as well. I mean, obviously, you have a footprint in the real estate industry, and that helps with the understanding of real estate. And of course, getting your CFP, again, it's no easy task. I mean, there's a lot of different. From my understanding of it, aside from the learnings, you actually have to do like an actual case, or you actually have to present.
Lots. Yeah, and it's internationally recognized in 26 countries around the world. It's like the gold standard in my industry. I think there's only 17,000 CFPs in Canada. So when you think we have a population of 41 million people, that's a lot of people not getting financial planning advice. And this is an important distinction. Some people think I'll have a financial advisor. And so the word advisor is not really regulated. Kind of anyone can call themselves a financial advisor, and financial advising is usually associated with investments and wealth management.
Right.
And I'm licensed to do that as well, but what I focus on as a planner is those, and I say this to all my clients, is like, I'm forward facing. Where are we today? What are the decisions we're going to make today that are going to put you in a good position for the future? How are you going to exit the real estate business? How are you going to sell those rental properties? How are you going to integrate your corporations with your spouses or the brokerage owners? And that. So that's what we do as a planner is we look ahead. We look at cash flow, taxes, estate planning, investments, risk mitigation, and all those pieces. So
perfect. Now we have real estate agents that listen and watch to our show here. And sort of what we want to take this episode in is, as real estate agents, there's obviously a potential for very high earners in this industry. Some listening might just be starting out, and so maybe you don't have as much finances to currently manage. But we're going to talk about why it's important to start from day one. But JoAnne, PREC is obviously for Personal Real Estate Corporation. PREC Planners is sort of the brand name that you've attached to this. So let's say a real estate agent who got into the business, who's earning income. Why does all this matter? Because, they're earning a high income. They're making money on their commissions. Why does financial planning actually why do they need it, and what is it for?
For sure. And so I've been doing this for 9 or 10 years, and I didn't really start focusing on real estate agents until 2020 when the PRECs came on the scene. So I had some clients that were real estate agents, and literally we were doing a review, and she said, "Jo, do you know what a PREC is? I just heard about it." And I was like, "I don't." So the nerd in me, I just dug in, learned everything about them, researched as much as possible, and just by default ended up becoming a subject matter expert in this space, because then my clients were like, "Jo, you're good at speaking about this. Would you come to my brokerage?" Remax Hallmark was one of my first brokerages I ever went to the point where I realized, I was like, oh my goodness, the real estate professional industry really needs help with financial literacy. They're an industry that's been left behind by my industry in regards to prospecting and helping. And so I've built so I launched this brand in 2024, and that's all I do is I just go into brokerages, I work with the real estate boards, and I'm there to help agents at all levels of their career. So just starting out to you maybe knew it being self-employed. How do we save for those taxes? How much of your commission income, like if you've been an employee and now you're self-employed, how do we manage that? All the way to those exit strategies for those agents that have been doing this for 25, 30 years, have a huge rental property portfolio or doing private mortgage lending. And now they're looking like, okay, well, what's my exit strategy from this business and how do I get out?
Right. So let's take it through, step by step, because we have all sorts of agents who are with us that are at different stages of their business in terms of their real estate business. And so it goes without saying that because you have a background of being self-employed, you know what it's like to be in their shoes, right? Maybe not necessarily selling real estate, but because you are self-employed, you have to earn income. You earn income usually, whether it's regular or irregular, depending on how well you built your business. So a real estate agent starts their business today. Obviously, their main goal is to get their pipeline going, build up their database, get those relationships so that they can get sales and get commissions. So in the early stages of a real estate agent's business building journey, where would you come into play in terms of financial planning, and what's the important, I guess, goals, benchmarks, things that they should be considering at that stage of their business?
Absolutely. So those first agents, when I talk with them, my first question is, what did you do before? So oftentimes I find real estate agents, this is a second career. There's not a ton of real estate agents that come right out of high school or college and go into real estate unless it's a family business. So if it's a family business, they grow up to it, they will. So the first question is, okay, what did you do before and what are you used to? So depending on what category they fall in there, we have that conversation. If they've never had commissioned income, I say that the first 3 deals of the year that you make are not your deals. Between your errors and omissions, your dues, your brokerage fees, your licensing, and all that sort of stuff, and your CPP, because you're not going to be incorporated yet, that's just your cost of doing business. It's an expensive business to be in. And people think because there's no overhead and there's no commodities that I have to sell, it's a cheap business, and it's not. And that's what catches those new agents off guard, is they forked over all this money for the courses and the insurance, and they get that first commission check for 10 grand and they go, sweet, okay, I can settle up. But it's like, no, you owe taxes on that.
Well, they get the lease on the new car already from the first paycheck or whatever.
And so not getting into that bad tax cycle of and again, it depends on where you are in Ontario. So I have clients all the way from London to Thunder Bay to the GTA to Ottawa. So the demographics of the cities are a bit different, but I say the quicker you can get those first 2 or 3 deals done, then you can kind of think mentally, okay, my basic bills are paid. Now I can start making money. And that would be the advice I'd give to those agents right in year 1. Is if you're truly committed to this as a career, like most businesses, you're not going to be making the big coin until probably year 4 or year 5.
Right. I mean, which makes which makes a lot of sense, because you're starting from literally zero, probably even negative, because you paid for your courses, you paid for your licensing, so you're already negative. You have to fill that up first, but then you do make your sales. And at this point, real estate agents watching and listening to this, you don't have a PREC. We're going to get to that in a moment, but you are being taxed at a personal income tax rate. And again, I'm not a tax expert. We have a CFP here as a financial planning expert. We're going to talk about that, how that affects you in a moment. But even let's say suppose in your first year you make your 100, 200, 300,000, you're being taxed at a very high rate. So now enter the PREC. JoAnne, what is a PREC for those who have never heard of it before? And what's the advantage of, obviously a brand new agent wouldn't go to PREC right away because they have no income and it doesn't make sense.
And it's funny, not necessarily. And I think this is my biggest beef with the whole PREC, Personal Real Estate Corporation thing, is people oversimplify it and will say, oh, as soon as you make 250 GCI, you should PREC. And if you don't, you shouldn't. And that's not the case. A PREC is only going to help you if you have money left over after you've paid yourself and your bills. And so what I mean by that, so an agent, their first year in the business, and so I'll take this example. retired military person. So people that, join the military from 20 to 8, they can take a full pension at age 45, and real estate might be a second career for them, or teaching, right?
Yes.
They've retired from teaching and this is a second career. So they've got this pension income coming in that's paying their bills. They might have spousal, like their spouse is making money and paying their bills. So that 100K of GCI they make in their first year, if they don't need it, they might be a perfect candidate for a corporation because it can just sit in a corporation and not be added to their personal tax. The flip side of that is just because you're an agent and you make $600,000 a year doesn't mean you should incorporate, because I know agents that do that, but they spend $600,000 a year, and so corporation doesn't help them at all.
Right.
So it's not how much you make, it's what's the cash flow coming into your house, what do you need to fund your lifestyle, and what's left over, and consistently. Just because you have one banner a year where you do 400K because you picked up a couple of big sales,
yes,
if you don't think you can replicate that year over year, you're better off to just shovel that into your RSPs or a spousal RSP and wait until you have consistent cash flow.
Right.
So it's not as clear cut. And I'd say sometimes when brokerages have like an accountant come in or a lawyer come in and talk about when should I incorporate, they way oversimplify it. And I'd say most agents incorporate too soon.
Right. So it's not a matter of, okay, I think I'm going to make this much. I'm at 200, 500, 600, a million. I need a PREC. But it's because there's also the effect of, when we do our business planning at Remax Hallmark, there is an activity that we do where we're going to get JoAnne involved more in those. We should get you more involved in those every year because this really helps. We developed this thing called a lifestyle number where you have your personal lifestyle number, you have your business lifestyle number. And the reason why that is important is because most agents kind of mix up those two, right? They blend in their groceries and all that with their car leases and business expenses. And so from an accounting perspective, they don't realize that I guess I can't claim everything. So if I make 600, I spend 400. Is that 400 personal and business? Is it just business? And I guess it also makes sense with that. And so I don't think it would be fair to say, okay, at what point do you make it? Do you get the PREC? When you work with your clients though, are you advising them? Like, do you look at, okay, Mr. and Mrs. Agent, here's how much you're making right now. Here's what you're keeping. Here's what you've spent. This is the time to do a PREC versus this is not. So could you explain, I guess, the rationale behind, without obviously going into it too much detail, but at what point should that really be looked at in terms of the consideration to get into the PREC mode?
Yeah, and so how I work with my clients, so I'd say half the people that hire us to do a plan for them don't have PRECs, and that's what they're hiring us for. Is like, let's do a full, and so we have a planning program, and it's 5 steps, and it's a deep dive into the full household financials, right? So again, if you have a spouse, what's their income looking like now and into the future? What are pensions looking like now into the future? Kids, are you going to be helping? Like, what's that cash flow look like both on the personal side and the business side? And you're right, real estate agents really overlap those personal and business expenses. And once you form a PREC though, remind me later to kind of go on my little rant about bookkeeping because it's different once you incorporate your business. So yes, we help our clients with that, make the decision, should they incorporate, should they not? And if not, what is the threshold in which they should? And so another measurable over outside of how much you need to fund your lifestyle is, do you have personal savings? Because sometimes agents will incorporate too soon because they're going to have a big year, but they still have tons of RSP contribution room. They have no personal savings, right?
Right, yes.
And so then what happens is they incorporate their business and all their money is stuck in what's called a retained earning. So money that's stuck up in the corporation. And 2 years later, oh shoot, they need a down payment for a house, or they want to co-sign for their kids for a down payment on a house, or their house needs a new roof, or there's this big expense. And now they're stuck lumping it all out of the corporation in 1 year because they had no personal savings.
Right, yes.
So I also say, really don't incorporate until you've got like a bit of a cushion on the personal side, personal savings. If they're separate entities, that's
don't jump into it because yes, it's kind of scary to pay a very high tax rate when you're earning that kind of income. And of course, we'll get into your bookkeeping rant. Don't worry. I'll remember to do that. But at the same time, it doesn't make sense to jump because there's also financial, there's also fees involved. And there's also what you pay an accountant is going to be different when they're doing taxes for you for a corporation versus personal. So there's a lot of different things. So let's say now you've got the agents who are a bit established, they do have a PREC, you've worked with them. And of course, in order for you to be able to find out what that is, you're going to contact JoAnne and we're going to get her contact information at the end of it. But let's say you're working with them now, and now it's not necessarily about the strategic aspect of PREC or not, how much money you're making. Now it becomes about building wealth and making money work for you. For those agents who are in that stage, where they've got a predictable income, they're consistent with their income, they've got good money habits, where does your company now take them to the next level?
That's where we thrive. So those clients that are already incorporated, and I'd say that's most of the conversations I'm having now. When I first started talking to people about PRECs in 2021 to 2023, there wasn't a lot to do because there was no retained earnings in these corporations.
Yes.
Right? So great, you incorporate in 2020 or 2021, but it takes a year or two for that money to be in there. So most of the conversation I'm having with agents now is, and my main talk I do is called PREC Now What? Because I've got this PREC and there's literally hundreds of thousands of dollars sitting in corporate bank accounts because these agents go, well, what do I do with it? So can I buy a rental with it? How do I save it? Do I take it out, put an RSP? And most agents don't know that you can do what's called like corporate investing. So the corporation just opens like a traditional investment account. I don't care what you put it. Pick some ETFs, pick some mutual funds, buy some stocks. And we're essentially trying to build your retirement plan inside the corporation.
Right.
On that front, though, people with corporations have to understand that investing in a corporation is taxed differently than on the personal side. So, for example, if you have an RSP and you put a GIC in an RSP, right? You have an RSP account, you buy a GIC with it, you get your 4% rate of return, that's fine. If you buy that same GIC with your corporate dollars, you're going to get a T3 slip for it, and you have to pay a 50% tax rate on that 4% rate of return. Because interest income inside of a corporation is taxed at 50%.
Wow.
So when I build corporate portfolios for my investment clients, I'm focusing on investment products that generate what's called a capital gain or dividend income, and we try and stay away from interest income.
That's interesting.
So I'd say if you have those DIY investors listening and they've got their Wealthsimple or their Questrade account and they've done really well with their RSPs and TFSAs, that strategy doesn't necessarily just overflow now into corporate investing.
Right. And just as an aside, you do help as well, like outside of PREC, you do help personal wealth, like management as well, like if they want to manage that wealth. Good. So let's get to the scary side now, because you've probably seen it all. We're going to get to your bookkeeping rant. But before that, what are the biggest financial mistakes you see real estate agents make with their money?
Okay. Depends on the stage of the career. One, just not having overall financial literacy and having a plan and knowing what they're doing. They're just reacting, right? And most real estate agents are very entrepreneurial and salespeople, and they're people.
Yes.
And not necessarily number people. So this is a great time to talk about bookkeeping. Okay. So before someone incorporates, most real estate agents start out and they bookkeep. And for those of you who can't see me, I've got quotations. And this is what they do. They get all into it one day. They open up an Excel sheet. They make some cool templates and they get all these systems in place. And then the next week they get busy and bookkeeping is the first thing that goes off their list.
Right.
And then at the end of the year, their accountant goes, give me your stuff. And you go, shoot, right, I said I'd do that. You take a day off, you hate your life, you do your best to kind of scramble some receipts together, and then you tell yourself you'll do better next year and you never actually do.
That's so true.
Yeah. And they don't understand what they can write off, what they can't, and whatever it is. So when you don't have a PREC, I don't want to say it's okay, but the CRA doesn't overly care because you're just going to pay tax on everything anyways.
Yes.
So, however, once we incorporate, corporations are held to a higher standard of bookkeeping. You have to abide by what's called GAAP, the generally approved accounting principles. You have to have things like financial statements. You have to have things called like profit and loss statements. And if you don't pay a bookkeeper to do it, your accountant's going to do it, and they're going to charge you $400 or $500 an hour to do a bunch of stuff that a bookkeeper could do for 40. And once you incorporate, you will get audited. So the CRA is going to let it run for about 4 or 5 years, and then they're going to come back and say, hey, Johnder, it's 2026. Show us all your meals and entertainment receipts from 2021. And Johnder, if you have a bookkeeper, you're going to go, no problem, talk to my bookkeeper, everything's there, and you keep selling houses.
Perfect.
If you don't have a bookkeeper, you go, shoot, 2021, let me print off my MasterCard statement. Where is that? I know I've got these receipts somewhere. And then CRA goes, whoa. You're not doing this right. And they're going to grind your business to a halt. Because they want what they want when they want it. And then they'll subject you to a whole audit. They can freeze your accounts. They can garnish your wages at the brokerage level. And they don't care that you're busy. They don't care that you have listings. Like sometimes they'll send an agent, like a CRA agent, to the brokerage office. And they'll sit there and be like, show me your expenses. And if you don't have them, the penalty is, so say, Johnder, they want to see your meals and entertainments for 2021 and you don't have it, but you claim 10 grand.
Yes.
They go back and say, okay, that doesn't count. They make you refile for 2021.
Right, yes.
All the penalties and interest that would have accrued over the past 5 years.
Right, yes.
So, like, I am not a bookkeeper. I do not sell bookkeeping services. I have nothing to gain by people having a bookkeeper or not. But it's just like once you incorporate, again, it's a cost. It's like kind of having a real company now.
Right.
And you just got to, it's one of those operating expenses that if you're serious about your business, I can refer you to some, but get a good bookkeeper and just avoid that whole situation.
Well, the thing is just that. I mean, we do see behind the scenes a lot of, and I'm not going to go into personal specific details about what we see happening. But it is true that, like, I mean, real estate salespeople are very entrepreneurial. They're very good with what they do. And they're also not good at what they're not good at, which is bookkeeping is the main part. So, JoAnne, that is a very thing that you brought that up, because I'm sure some of you, majority of you listening and watching to this are like, yeah, I know what that's like. I was audited, CRA, withheld this, garnished that. It's just a natural thing. And the sad truth is we do see this in a lot of high earners, because like they bring in a lot of money. It's very easy to lose track of what you've made and what you've spent. Real estate is one of those things where you do genuinely take out clients and you can claim those meals as entertainment. You buy gifts. Some of them are lavish gifts. You're driving cars and you're leasing them to your business. But JoAnne's main point here is you've just got to have a good, solid bookkeeper. And if you're not a good bookkeeper yourself and your receipts are at your table in a shoebox in your filing cabinet at your office, it's not going to work out for you that way, right? And I think it's fair to say, JoAnne, that this applies to whether you're PREC or not. I don't think it's really even a matter of a PREC issue. It's just a matter of, just making sure that you're doing this properly, right? So thank you so much for that insight.
But also challenge too. So any business owner, and this transcends real estate. So in one of my presentations, at the end of it, I put up a FSBO sign, like a for sale by owner sign.
Yes.
And I asked the room, I'm like, how do you feel when you drive one of these signs on a lawn? And they all grumble and be like, oh, if they hired an agent, I'd get them more money and it would be more compliant and I would sell the house faster. And even with my commission, they're going to make more. I hate when people FSBO. It makes no sense.
Right on.
And then I go, the number one error that I see agents make is I go, you try and FSBO your finances.
There you go.
For some reason, you think you're a bookkeeper and an accountant and a financial planner and an investor and an insurance broker. You sell houses, so stop for sale by owning your finances and bring in professionals. We're going to get done faster, cheaper, more lucratively than you trying to navigate this on your own. So as a business owner, like I said, I'm self-employed. I look at, okay, what do I do best and what's revenue generating for me? And if it's not a revenue generating activity, I need to outsource that because there's someone that's going to do it better, faster, and cheaper than I can.
That's the best analogy. And I think I'm going to use that from now on with anything that a real estate agent tries to do themselves. I really appreciate that. So you've got a hobby farm. And of course, like as a self-employed individual, you built up your business. You and your husband have an awesome self-employment structure to yourselves. And we have real estate agents too that want, quote unquote, their own hobby farm, which is maybe their investment property or something they want to do for fun. Or anything. And if you want to go into detail about your hobby farm, we can do that too. So JoAnne, when realtors and entrepreneurs in general are building their wealth and they're doing things that are advantageous because they've hired experts such as yourself. They've got a good, solid system, and you see these financial benefits to that. So let's hear some of your, I know you can't divulge confidential information, obviously, but let's hear some of the success stories that you've had working with clients who got their stuff together, are solid financially, and sort of the adventures and the things that they've been able to finance as a result of structuring their PREC properly and also working with a certified financial planner who knows what they're talking about in terms of building wealth.
That's awesome. And I think, anyone can go to our Google review page, which I only just got going a year ago, but all my reviews on there are from actual clients. So they're not friends and families or anything like that. They're just clients and their stories. And so much of the value that we add is people don't know what you don't know. Right? So they'll hire us for a question like, Joe, should we form a PREC or not? And I can do that all day long. But once I get to know them, like I'm a professional, I can see these risks and opportunities that they may not be aware of. So one example that comes to mind, I have an agent, he's a top performer, been doing this for 15 years, does about 600-700 GCI a year, like great guy. And he has 3 sons that are all in their early 20s. His wife is a retired teacher. He has a PREC. And so he was just hired, because again, he had retained earnings in his PREC. He had cash in the bank.
Yes.
He attended one of my sessions and he's like, I just want to sell houses. This has kind of grown beyond my means. What do I do? I've got 2 rentals, 3 young kids, my wife's pension, like all the things. So we did a plan. And part of that is we saw his articles of incorporation. And he had his real estate lawyer set up his PREC, not a business lawyer.
Right.
And the real estate lawyer had put his 3 young sons on it as shareholders. Okay. So they were non-voting, non-equity, so it was fine.
Yes.
But then I had let's call this client Jeff, and I said, Jeff, talk to me about your sons. And so one of them's engaged. And so, because right now they each own a third, and a third of these non-voting shares.
Right.
And I said, so one of them's engaged, and if there's no prenup, and they get divorced 5 years from now, she's entitled to half the value of his shares of what is essentially your retirement plan.
Right. Yes.
And because he has over $1 million in his PREC.
Right.
And I was like, so right now I understand where the lawyer came from. He was like, from an estate planning standpoint, the sons would inherit it. So your corporation also needs a will, just so you know, side note. It's a separate entity. It doesn't fall under your personal will, so it needs what's called a dual will. So I worked with his accountant, and in that situation, what we ended up doing is we opened a holding company, transferred the PREC assets into the holding company. So he didn't have to talk to his sons about make sure you get a prenup and like all this sort of stuff. He just left it. He didn't have to open that can of worms. But that was just one of those little things that just like a second set of eyes on the whole big picture of maybe potentially saved him some problems down the road.
Yeah. So, I mean, the good part is that there's a way to use this vehicle as a way to build serious wealth and also finance your future lifestyle, your things that you like to do for fun and all that. But you also have to hire professionals who know what they're doing, because there are also pitfalls in terms of where things can go with that, right?
Yeah, and I'd say that's like, if you're listening to the call and you're considering incorporating, or you have, again, just, I know you have a relationship with a real estate lawyer, and the real estate lawyer will probably do it for cheaper, but cheaper isn't better. It's a one-time cost. Hire a business lawyer that understands, because personal real estate corporations have what are called certain shareholder restrictions, and your average lawyer may not understand. It's better now because they've been around for a while, but especially in those first few years, there was a lot of agents that had to pay money because, according to RICO, you can't have other people own equity in your PREC.
Right, exactly. Yeah, good. So, JoAnne, this was a very exciting conversation, and I can honestly say I haven't met anybody who's as excited or can really keep me engaged in talking about number crunching and financial planning and wealth as you. So, www.theprec.planners. And JoAnne, do you have a personal number and an email that you're willing to share for anybody who wants to reach out? Contact you for consultation?
JoAnne at theprecplanners.ca. My phone number is on there. We're pretty accessible. My Calendly link if you want to book in. I've got a great team. So I've got paraplanners, investment associates, and an office manager. A big thing we do, like I said, is we go into brokerages and we offer education sessions around this. So if anyone's listening, they think that your brokerage might be interested, shoot us an email and we'll coordinate that. I mean, we have like 28 presentations booked between January and April.
I hope several of them are with Remax Hallmark, because I know we bring you in quite often. So
so that's. And follow along. I'm doing a virtual session on February 19th about investing in the PREC. I love this. So thank you so much.
Yeah, thanks. It's our pleasure for having you here, JoAnne. And thank you so much for joining us here on the Real Estate Strategies with Remax Hallmark. Thank you for all those who watch and listen. Make sure you like, comment, subscribe, visit JoAnne's website, and get excited about building wealth with her, and rely on her team and her expertise to help you build wealth in real estate. Thanks so much.
Awesome. Thank you.
Our pleasure.